Hi, Zach with Real Property Associates here. Thank you so much for clicking play on this video. Today we're going to talk about one of the most important parts of the home buying process, and this is actually making an offer. This is a question that I deal with when talking with clients. Typically we begin the conversation at our preliminary meeting. That's when we meet up for coffee or a beer and we talk about the home buying process and the steps towards buying a house. And this is a conversation that we will pick up when we meet up to make our offer. And this is typically just a phone conversation that we'll have discussing what an offer is and then also what we're going to offer to the seller. And so I want you to know up front, I'm on your team. If you're my client already, I'm on your team and I'm working with you, and this isn't something that you have to have a full understanding of or a complete grasp of. I just want it to be informative so that you know what we're going to be discussing and you are prepared to make an informed offer when we get to that point. If you're not my client right now and you're finding this on another website, welcome. Thanks for tuning in, and I hope that you find this educational as well. The first step in a contract negotiation, especially real estate wise, is going to be the price. That's usually the main focal point. And okay, before we even get into that, I want to jump back. I skipped something. If you're trying to buy a house and you don't have a pre-approval letter from a bank, none of this is really going to matter. And so if you're my client, we've already discussed getting your pre-approval, and you're likely already pre-approved at this point as you're searching for houses. But if you don't have your pre-approval with a lender, and I have recommendations if you need them, you need to get this. So because without this, you don't have any chance of getting an offer accepted right now, especially with the competitive landscape. So please get your pre-approval letter, talk to a bank. That's, in my opinion, step number 2 in the home buying process, is speaking with a lender and getting pre-approved for a loan. And so like I said, if you're my client, you already have this, or you should already have this. And so I just wanted to bring that up first. So let's jump back. Let's jump back into the making an offer. And so we're going to talk about price. This is typically the buyer wanting to get the lowest price and the seller wanting to get the highest possible price. And right now in the climate that we have, what we're seeing is typically we're seeing multiple offers on each house. And if we're not seeing multiple offers, we're still seeing homes sell quickly in 7 to 10 days. And so typically the bedrock is the asking price. Very rarely are we seeing sellers accept anything less than the asking price, and we're seeing sellers are even willing to wait 3-4 weeks before they're willing to consider something that's below the asking price. So I want you to come in with the expectation that the asking price is the bedrock, and you're most likely going to be paying more than the asking price. There are occasions where I've had clients, even this year, get homes below the asking price, but that's typically after the home's been on the market for 3-4 weeks, and we really have to prod a little bit. So just as an expectation, we're typically going to be going over the asking price. And when I advise clients on what they should and how they should think about the price, you've likely seen many homes that are fairly similar and comparable in the area. That's because we've narrowed down what your search criteria are, and we're looking at homes in the area with similar attributes. So you should have a good handle on the comparable listings that are available. And if you don't, and if this is one of the first houses that we looked at and you're really excited about it and you want to buy it, the comparable sales, that's going to be the best place to look. And so I've got a good handle on the comparable sales, and I'm willing and happy to talk about those with you, and also talk about we can even look them up and get really specific and really narrow down where we think a good offer price is. And like I said, typically the asking price is the bedrock, and then in a competitive situation, if there's multiple offers, it ends up being more like a silent bid. And so in this, we include an escalator clause, and we'll talk about that a little bit further in my other video called Making a Competitive Offer. But the escalation clause is going to have a few facets. The first part of the escalation clause is it's going to have your max price. So just like in a silent auction, you're going to say, I'm willing to pay this, and you write down that number. But what the escalation clause does is it allows you to actually make an asking price offer and then choose an increment, which is a dollar amount that you're willing to pay over the next best offer. And so if for example, the asking price is $500,000, and you're going to say, I'm willing to pay $500,000, but if there's multiple offers, I'm willing to pay $6,100 more than the next best offer up to X. And so maybe that's $550,000. And a lot of times we see in a competitive situation, it could be anywhere between 5 to 20% over the asking price. The average in the city of Seattle has been somewhere around 3 to 4%. In some of the suburbs, that's a little lower, like 1 to 2%. But if it's a really hot house and you really like it and 7 other people really like it, you might see that number jump up somewhere between 5 to 10 to 15, even 20%. So I just want that to be an expectation up front. I hope in your case that it doesn't end up being that competitive, but it likely could. And so I want that to be an expectation. And when it comes down to it, I'm happy to talk about it. We can analyze what similar sales have been like and how much they've gone over, and we can really get into those numbers if you want. But this is more of a preliminary approach here. The second thing I want to talk about is earnest money. And earnest money, the best way to describe it is it's a good faith deposit. When you make your offer, you're committing to purchase the house, and we have a few contingencies that'll be included. We'll talk about those in a sec. But you're committing to purchase this house. And so with that commitment, you're giving monetary consideration. You're saying, I'm committing to buy this house and I'm very committed, and you're giving the seller your earnest money. And your earnest money, like I said, is a good faith deposit. It's credited towards your down payment at closing, and it's also, or your closing costs. So it's not an extra fee that you're paying, but it's something that you're paying up front. It's your commitment to purchase the property. Another thing to note, the earnest money is typically somewhere between 2 to 3%. So on a $500,000 house, we're looking at somewhere between $10,000 to $15,000 of earnest money. The other things to note with earnest money is that it can either be a check or, so a check, it's personal check, cashier's check, either one works, or a wire, and that's going to be going to the escrow company, another term we'll talk about here in a sec if you're not already familiar with it. But that's just a quick overview on earnest money. Feel free to ask me more questions if you have them about earnest money, but that's just our quick overview. The common addenda that are included in the contract, that's something that I had mentioned earlier. So we're going to have a few things. Financing is going to be included. So that's it's also a contingency. So some of these addendas are also contingencies, and a contingency is a but in the contract. So what that means is you're committing to buy the house with eventualities protected. I guess that's the best way to say it. So a contingency is essentially a future eventuality that you're protecting yourself for in the contract and being prepared for. So when you make your offer, you're saying, I'm buying this house, but, and then insert the blank, fill in the blank. So that's a financing contingency, which is also one of the addendas. And this is spelling out what kind of loan you're getting, whether it's a conventional loan, a rehab loan, a FHA loan, VA loan, etc. How much you're putting down on the property. Is it 5%? Is it 10%? Is it 20%? Is it more? If it's cash, you don't have to worry about this, and that's nice. And the seller likes that too, but typically homes sell with financing attached. And so this financing addendum acts as a notification to the seller on how qualified you are as a buyer and what kind of financing you're going to be securing. And it also protects you in the case that you can't get a loan. You're able to back out of the contract and get your earnest money back. The other common addendas are the inspection addenda. And so the inspection addendum, that's going to have a few things. It's going to include a certain time limit. So typically we have 7 to 10 days to conduct an inspection, and we get to write that number in. In a competitive situation, we'll see that being a smaller number, but in a normal situation, you have 7 to 10 days to conduct your initial inspection, and then certain time periods after that to conduct additional inspections if the inspector recommends them. And then this is kind of your last opportunity in the contract to back out. So you make your offer. Your financing, as long as you've got your pre-approval, is pretty much going to happen. Unless there's something funky that happens, like you lose your job, that's not really an out. There is an appraisal contingency, an appraisal but, B-U-T, but, that's included in that. And so if for some reason the appraisal comes in a little bit lower than what the purchase price is, then there's some room for negotiation in that. But typically, we're not seeing huge problems with appraisals as far as values right now. And so you're most likely at this point committing yourself to the purchase after getting past the inspection period. And so in that contingency, you're able to, once you have the inspection, respond back to the seller and say, yes, I still want to buy the house, let's go for it. Yes, I still want to buy the house, but I'd like you to do X and Y. Or no, I do not want to buy the house anymore and I'd like to back out and get my earnest money. Those are kind of your main options. The seller can then respond back and accept your response, make a counter response and say, we're going to do these things, or they can say, no, we're not going to do anything at all. And then at that point, you're going to most likely either just agree with them and say, yep, sure, we'll still buy the house, maybe try to renegotiate again, or just back out. Those are your main options there with the inspection contingency. Some of these other addenda aren't really contingencies, but they are a part of the contract. That's going to be, it's an optional clauses form, and that just is some of the junk drawer of other things, part of the contract. Like, we don't want the seller to leave behind their junk. We want them to, if they do leave behind things that you like and they leave it behind, it becomes yours at the purchase upon closing. There's some other disclosures tied in there, but the main stuff is, it's still connected to heat, it's still connected to electricity, things like that are included in the optional clauses form. And then there's a utilities addendum, and we're just asking for the seller to disclose, who the utilities providers are, and then that way escrow can work with them to make sure that the seller has paid off their portion of the relevant utilities prior to closing. Other things that might be included as addendum are the escalation clause. We talked about that before, and also the contingent purchase. And right now, like I said, it's typically a competitive market out there if you're trying to buy a house in Seattle specifically. And so you're most likely not going to be able to purchase contingent. In a normal market, it's great. Purchasing contingent's excellent, where you want to sell your house and then buy another one, but you need to, you make an offer prior on this new house with the contingency that you need to sell the other house first. And right now, most sellers aren't accepting that, even if there aren't multiple offers, because they know if they wait just a few more days, they might get an offer that's not contingent. So if you are somebody that needs to sell before you can buy, let's have a conversation and talk about some of those options, but contingent purchase isn't one of them, at least right now. And I'm recording this video in 2016, end of the year. So know that for perspective in case you're watching this video down the road, maybe in 2017, 18, if the market's shifted a little bit, we might have that as an option. But right now, as far as when I'm recording this video, it's not an option. A few other things to note as we talk about offers. We do have what are called disclosures, and you're probably familiar with the disclosure, but the common disclosures in a purchase transaction are going to be a lead-based paint disclosure. And so the seller is going to let you know what knowledge they have about lead-based paint in the home, and if they've done anything to remedy that, if they did know of anything. And so with lead-based paint, and any house built before 1978, there's potential to have lead-based paint in the house. The most common remedy is just to paint over that. And so most homes, especially in Seattle and Everett, some of the areas around that have pockets of older, even Edmonds, that have pockets of these older homes that were built in the 20s, 30s, these homes have likely been painted over 4, 5, 6, 7 times. So it's usually not a problem, but there is a disclosure. And so if you're my client, you've either received this or will be receiving this. There's a packet that talks about some of the risks associated with lead-based paint, and you are entitled to a lead-based paint inspection if you'd like. Most clients of mine do not elect to do the lead-based paint inspection, but I want that to be known that it is an option for you. In a competitive situation, unfortunately, that's usually a detracting factor. So if you do want to do a lead-based paint inspection and we're in a competitive situation, it's usually going to hinder your chances of getting your offer accepted. But it is an option, it has been done, and I want you to at least know that it's there. But most people just go ahead and waive their right to do a lead-based paint inspection, especially since, if they can tell the home's been recently painted. Another thing that the seller is going to provide is a seller disclosure, and so this is more it does encompass actually the lead-based paint disclosure. It's now included, but it does encompass a lot more, and it's going to talk about the different systems in the house, and it's going to talk about the house in general, and they're going to disclose what they know to be wrong with the house. And so these are going to be things that are obvious to you as a buyer, and then some things that might not be obvious, like if there's if it floods during the winter, but it's the summertime and you wouldn't know that information, or if the house has a leaky roof or had a leaky roof. So it's going to ask the seller tons of questions that they can answer yes, no, maybe, or don't know. And this form is going to serve as a disclosure to you about what the seller knows. And so with the seller disclosure, the lead-based paint disclosure, and also the inspection addendum, those are all designed to protect you as the buyer and give you all the information that you need to make a good decision about moving forward with the property or not. And so your options with the seller disclosure form, you can just note that you've received it, and that's great. You can also waive your right to revoke your offer based on it, and you can also waive your right to receive a seller disclosure form. But if this form isn't included in the initial contract, you do have the option to revoke your offer at any point up until closing. And typically this is given up front, so you don't have that, but there's occasionally funky situations where the seller for some reason doesn't provide it, and that gives you the opportunity to back out without that disclosure. And so typically you have a few day period, I think it's 3 days, right off the top of my head, that you have to review that report if they give it to you, after they've given it to you, and back out of the contract. And the lead-based paint disclosure gives you a short time period too. And those, if you waive your right to the inspection and you waive your right to revoke your offer, those contingencies would be removed. But those are a few that are commonly included contingencies in a normal situation, but not typically a competitive situation. A couple more things to talk about before we end this video. So we're going to get to decide on a title company and an escrow company. Title is like a car title. So if you've purchased a car before, you're familiar with this. But what essentially the title is doing is it's a piece of evidence that shows that you're the true owner, or in this case, the seller is the owner of the property. And so title insurance is going to protect you as the buyer and the lender as well, to protect against any defects, as they call them. And these defects could be tax liens that are out there. They could be unpaid property tax, though I guess that's taxing, right? Unpaid property taxes. It could be any encumbrances on the property. It could be really a big number of things. It could be fraud. It could be forgery. What title insurance is going to do is going to protect against those things if somebody has an ownership claim on the property. And what it does is actually backdates. So whereas typically like a car insurance will actually protect you against future events, what title insurance is going to do is it's going to protect you against past events, things that you don't know about, things that you don't know. It's essentially to protect against things that have happened in the past and help you to be able to move forward comfortably and confidently with the purchase. And this is going to be included in any purchase transaction. I've had clients ask me, is this something that I have to go out and seek differently, or have we already done this? It's been taken care of, and most lenders will require it. And then the escrow company, and sometimes these title and escrow companies are the same company. Actually, a lot of times they are. But the escrow company, their job is to play referee. That's the best analogy for it. Their job is to be an unbiased third party that handles the finances in the transaction and also make sure that we're hitting our deadlines and closing on time. And so they're going to make sure that you're playing nice with the seller. And they're also, another analogy I like to give is they're like a closer. That's the other term for an escrow officer. They're like a closer. And so if you play baseball or softball or are familiar with the games and how they work, somebody comes in typically at the end to pitch the last inning or inning and a half and make sure that the game gets closed out, and that the winning team, the team that's leading in the ninth inning, comes home as the winner. And that's the same kind of idea here. The escrow officer, the closer, comes in. They're making sure that we get to the finish line. And so the title and escrow company, typically the seller's agent will just have some recommended people that they work with traditionally, and those are people that typically will just go ahead and use their people. In some situations, if they don't have recommendations, or we're really having a lot of leeway on negotiation, sometimes we can pick our own. But typically, we'll just go ahead and take the seller's recommendations. And the prices on these things are very similar. It's a regulated industry, and so no matter which companies we're working with, pricing is going to be the same. It's pretty similar, so you don't have to worry about that as a factor. But I hope this has been helpful for you. We talked about price, we've talked about the earnest money, we've talked about common addenda in the contract, we've talked about disclosures, we've talked about contingencies, title, escrow, a lot of the main things that we would talk about if we had a phone conversation about making an offer. So again, if you're my client and you watch this video, thumbs up. Thank you so much for paying attention. It's a 20-minute video and hopefully it wasn't too boring. And like I said, I'm on your team. I'm going to be with you. You're not in this alone. And so after you've watched this video, when we get close to making an offer, we're definitely going to have a phone conversation to talk about the details. And I'd love to discuss any of the things that you have questions about. And if you want to see a copy of the purchase and sale agreement up front and what these documents actually look like, I'm happy to provide those as well. If you're not my client and you're watching this video, feel free to reach out to me if you have any questions, further questions about making an offer, or you're looking for somebody to help you with your home purchase. I'm happy to be a resource for you and help in any way that I can. Until next time, bye for now.